On this week's episode of Elevate Your Wealth, we're going to be talking about why we need to think about cutting risk in our portfolios. Also, an interesting segment on two truths and a lie. And then, can we be positive? All this and so much more on Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins. You can find them right here in Seattle at Elevated Financial Management, the power behind this program. And between these two, 42 years combined experience plus, and it's all about getting you ready for your retirement, helping hundreds of their clients do that. They are certified financial fiduciaries. I'm Morgan Patrick. It's my pleasure to go back and forth each and every week on so many important retirement topics. And we're going to give you an opportunity to get on the calendar with Elevated Financial Management. And again, it's about having a plan. The appointments we do open up, they are complimentary. So stay tuned for that. Gentlemen, before we dive in on the latest in the news and the headlines when it comes to retirement, how was your week? Mark, let's start with you.
It's been good. We were down with some fellow colleagues, you might say, in Arizona, and it was a really, really good couple of days. We got to interact. We got to talk about things that are really going to be helpful to our clients here in Seattle, and it's just really nice to be able to mingle with other very successful offices around the United States. And when we do that, it's always been great for Casey and I because we always bring home a tidbit or two that we can hardly wait to share with our clients and find different ways that we can help our clients' portfolios improve, set up different types of income streams based on certain things. So again, it was a really nice couple of days and starting to get hot in Phoenix. I will say that it was 95 when we were down there, so it's starting to warm up.
I mean, think about it. It's like continuing ed.
Yes,
when you get together with some of the best minds in the country.
Yep.
What's working up in over in New York or down in Texas, or maybe something pops up in L.A. What's going on in Seattle? I mean, and again, you guys can share your notes and just make everybody better across the board.
Yeah.
And it's so important to have that kind of resource, and you guys have that. Casey, what about you? Week, how was it?
Yeah, same thing, right? In Arizona, it's hot down there. I'm jealous. I enjoy the heat. For those of you that don't know, I would rather have it be either 90 degrees all the time or the rest of the year like 15 degrees and snowing. I'm not interested in the middle ground. I like the extremes when it comes to weather. So I enjoyed the heat while I was there. That was fun. And the Mariners are doing great. I mean, just the guys have been on fire. So we're really excited about that. There's a lot of buzz in the air in Seattle because of that, which we're having fun with. And we've got a couple games scheduled here coming up that we're going to. So we're looking forward to it. And it's been really good. Yeah, we've been really busy, which is always good.
Yep, the Yankees are coming to town, baby, and get ready, man. I love it when the Yankees come to town.
That's right.
Well, not only are they coming to town, you guys are very similar record-wise. It's going to be a nice competition as the season goes along. And I'm a Braves fan, so Atlanta has got a long season. We need to improve.
Well, you started out really bad, which is
really bad.
Unusual.
Really bad.
Really,
I mean, we
bad.
were under the field. We were so bad.
It was very unusual for the Braves, but in Seattle it was kind of the opposite. After so many years of mediocrity, we're just kind of staying positive, but also kind of waiting for the other shoe to drop. Hopefully it will not.
Wow, that's a pessimist.
Yeah,
Holy cow.
that was a terrible thing to say. Can you imagine?
Yeah, well,
Gloom and doom.
Yeah.
I've always said Eeyore over there.
Yeah. You sound like a real fan
Whatever.
saying stuff like that. Come on, man. Get out of here.
40 years of Eeyore has been enough. It's time to stop it.
You're right. We have had enough of you.
We have fun here on the program, but it's very serious when it comes to retirement and retirement planning. We do want to, as the show says, elevate your wealth when it comes to retirement. Check out the website. It's a good resource for you. EFMNW.com, all letters, EFMNW.com. And we customize this show every single week. So it's about what the guys want to talk about, what is happening in retirement. And the first article that we have on the show is Schwab CEO says investors cutting risk after April turmoil. Guys, just dive in.
Yeah, it's been a wild ride. I don't think that we necessarily need to lay that out for everybody. Everybody's experiencing it. But, this article really kind of caught our attention because there's some numbers that back it up. And so we'll share a little bit of that. But really what this boils down to is, if you're going to cut risk right now, we can understand why, right? We get it. What that really tells us, if that's somebody's knee-jerk reaction when the market starts to get intense like it has been recently, is it tells us that you probably don't have a plan. That's really what this boils down to, right? And we always bring it back to a plan because that's so important. But I will say that for the majority of folks that we work with, we have not looked to go and cut risk down because we've done a lot of hard work up front to make sure that these type of market issues don't decimate somebody's retirement, right? And so if you heard this headline that investors are cutting risk after the turmoil in April, or if you yourself did cut risk, we would challenge you to get a plan. Right, that's really what caught our eye about this. So there's a couple numbers that we'll share. It says that in April, 61% of clients polled by Schwab said they were feeling bearish, whereas only 32% felt that way in the first quarter. And so just the sentiment has changed quite a bit. And we think that's really notable. There's a couple other things that I wanted to share real quick. And Mark, I know you've got some thoughts on this too. It says here that clients logged in 500 million times in the first quarter, which was a record amount of times. And then it says in the first quarter, there was a record 7.4 million trades a day is what Schwab showed. That figure hit a record of 10.7 million trades during the week of April 7th. So with the type of turmoil, and really the reason we're hitting these, right, these statistics, it's like, well, what does that really mean? And the point here is it means people are scared, right? People are worried, people are concerned, and so they're moving money. But my question to you is, are you moving money? Are you making changes to put a plan into place? Or are you making emotional decisions that may not actually be the right decision? It's just overly emotional. And when emotions are high and we see what's going on in the market, that can really, drive people to making the wrong choice.
Yeah, and to kind of piggyback what Casey just said, the interesting thing is if plans are set up and our clients have plans that this type of volatility can always be positive because it can be a buying opportunity, right? When everybody else kind of is, jumping off the ledge or off the ship, it might be a good buying opportunity for what we call our red money. We keep it simple in our office. We have red, yellow, and green buckets. And when the income is set, we can afford to take more risk. And I think that's really what differentiates us from a lot of wirehouses or the big box stores, because when we put together a true plan, volatility is not necessarily a bad thing for the red money. Where it's really can be devastating is on the income side. So if you're taking, red assets or assets in the market and having to create income from that, that's where you could get into a lot of trouble. But we have that, our red money, our money in the market is set for long-term growth. We know the market's going to do its thing. It's going to go up. It's going to go down. Always has and always will. So again, if you've got a plan, as Casey mentioned, that's going to take a lot of that fear and anxiety and put it to the side. We're not getting a lot of calls right now from our clients because they feel good about what we've set up for them. So again, it's all about having a plan to help make sure that your retirement doesn't come off the rails and is going up and down erratically, what we've seen over the last several months in the market.
Tell you, with what we're going through, and it's been kind of up and down, but people are obviously concerned about their future. Casey, I think you hit on it, Mark, and you emphasized it as well. The fact that so many people are nervous, they don't have plans. They are flying blind, so to speak. They're sitting on portfolios they're thinking about almost like the mindset of a day trader. What should I be doing? And man, this is dangerous territory because this is big money. This is your retirement.
It is your retirement, right? And it's something that you've got to be paying attention to. Here's something else, and I think this really kind of sums it up in a nice way from this article. It says customer service lines also received hundreds of thousands of calls a day, and readership of Schwab's research spiked 40% in the first quarter. So, I mean, that right there is just the sound of uncertainty, right? And the concern of what's happening and how is it going to affect me and what can I do to protect myself? But you want to be cautious because after some of the worst days in the market are some of the best days in the market, right? And that's, again, where a plan comes into play. So for those that are listening that want to take advantage of that would like to have a plan for their retirement and figure out how this is affecting you, figure out what you can do to shield yourself from these types of issues and make sure that you're still going to have a positive retirement, this is your chance to get a complimentary, no obligation, written financial plan put together by our team of financial planners. We will talk about the risk you're taking, how much income you can expect in retirement, what taxes will look like, how inflation will affect your portfolio. This is your opportunity to get a custom tailored plan, so don't hesitate. Pick up the phone. Give us a shout now.
Here's the phone number, 866-668-3625. Again, the number, 866-668-3625. There's no cost to this. If you have saved $250,000 or more towards your retirement, these strategies are going to work best for you. You're going to walk out with a written financial plan, and it's no cost to you. 866-668-3625. When we return, it's game show time. I'll put on my game show voice, and we'll play Two Truths and a Lie. Coming up next on Elevate Your Wealth. Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management. Check out the website. It's a resource you can lean into. EFMNW.com. All letters. EFMNW.com. Again, there are links to the TV show, our radio shows, and podcast form. Really good information there for you. Again, EFMNW.com. And between Mark and Casey, 42 years plus combined experience, and it's all about helping their clients get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick, and now I get to put on my game show voice, and we get to play Two Truths and a Lie. And our contestants today, well, are Mark Stimpson and Casey Elkins. And guys, welcome to the program. Best of luck. Hope you win big today on our game show, Two Truths and a Lie. So remember this game show. It was out there, and we've created our own version here, and we're having some fun with it. And again, it's two retirement truths and a lie. So I will read, there are three of them. I will read three things, and you will tell me which one is not true. All right? So first up, two truths and a lie. Here's the first one. I can't depend solely on Social Security benefits to pay for my living expenses when retired. Second, it's never too early to start saving for retirement. And third, I don't need help with my plan. I can use an app for free and get the same information. Where's the lie, guys?
Well, hopefully that one is really obvious, but that one did follow the idea. The first two are the truth, and the third one is a lie. So I don't need help with my plan. I can use an app for free and get the same information. It's an interesting time that we live in with AI and robo-advisors. And, the reality is those certain tools do have a place. They absolutely do. We actually use AI in some of the things that we do here around the office. We use some very advanced not necessarily robo-advisors, but robotic or, like I said, automated type things in what we do. Yeah, softwares. They do have a place, absolutely. But it still requires somebody to interpret the information correctly and interpret it in a way as to how it affects you, right? And as to how it affects your individual life. And so, you really can't just open up an account with a robo-advisor or one of these apps that tracks investments and create a retirement plan. They may do a good job at helping you accumulate wealth. That I think is potentially their place, right? I think that's where they're good at. But that personal touch as to how do you spend down the assets, how is it going to affect your life, how does it factor in with Social Security and Medicare and long-term care, and how much income can you actually generate in retirement, all those kinds of things. That's very different. And I will say AI, robo-advisors, they are not at that point yet. And I don't think that they ever will be, simply from the standpoint that when it comes down to what we do, it's really about a personal touch. It's about having a conversation with somebody that can hear what you have to say, understand where you're coming from, and help you pick the right path to move forward. And a robo-advisor isn't going to be able to do that. AI isn't going to be able to do it. They're not designed that way, and I don't see that functionality. Now, maybe 15, 20 years from now, I'll get proven wrong on that, but it's not happening anytime soon.
Yeah, and what I'd like to add to that is trying to ask your robot about certain emotional things that are going to come up. I'll never forget, we had a couple, and the wife looked at the husband. They'd been married, 40-some years, and she looked at him and said, we were talking about a subject, and she looked at him and says, I never knew you felt that way. Okay, so I'd like to know how the robot's going to deal with that one, right, when that comes up. So again, emotion is very, very important when it comes to retirement planning. And there's just things that, like Casey mentioned, the personal touch that has to be part of that plan. Because if we don't reach our clients on an emotional level and we're just talking numbers, clients are just going to shut off.
Sure.
It's when they find out how much we care, not how much we know, but how much we care.
Right.
That's when it changes everything. So again, I'm with Casey. The robo-advisor may do certain things, but I don't believe he'll ever replace a true retirement planner that's as valuable as what I feel we bring to the table.
Well, you bring up the human emotion part of it. I remember the old saying, my dad taught me this years ago, read the room, right? Read the room.
Yep.
How is a robo-advisor going to read what's going on in the conference room? They're not.
Right.
There's a lot of human emotion. This is their money. This is your money out there. You want it to be doing everything it can be, for your retirement. So working with a fiduciary advisor, fiduciary firm, putting your best interests right up front. I mean, that's the confidence we talk about so often here on this program. Have that plan.
I think part of it too is almost, as long as we're down this path, I think part of it almost is kind of like, if you were to go see a therapist, AI is not going to be your therapist, right? A robo therapist is not a thing, right? And I don't imagine that it ever will be. And so it requires a personal touch for that. And what we do, the finance of what we do, the numbers, some of that can be automated. Sure, I can appreciate that. And we use those types of tools. But the emotion behind it, which is why you saved the money in the first place. You didn't save the money in the first place to have some big account and brag to your friends that you got $1 million in your 401k. You saved it to meet your emotional needs in retirement, which is to go live your life and enjoy your time. And all of that requires somebody on the other end of that conversation for it to be valuable.
Two Truths and a Lie. It's our game show, and we continue on. Here is our next one. Two Truths and a Lie. Medicare is free, and I don't need to pay for anything health-related once I enroll. Second, Medicare does not cover all medical expenses. And third, you will spend more when you retire because of higher medical costs. Can you spot the lie, gentlemen?
Yeah, that's an easy one here, and it's the very first one. Medicare is free, and I don't need to pay for anything health-related once I enroll. Well, one of the things that I want to really highlight about this one is long-term care. Long-term care is not going to be covered by Medicare. Now, you may be fortunate enough to get up to 100 days if you're on a skilled level of care. But if you're on intermediate or custodial, you will get nothing. And my grandfather's a good example of this. He was in a nursing facility with Alzheimer's for close to 7 years, and he didn't get a dime from Medicare. So be very careful if you think once you enroll in Medicare, and we've had clients that believe that too, they thought that, and it's just not the case. There can be other expenses. Something to also think about, there's part A and B, there's also C and D, but I want to focus on A and B. A is the hospital part, B is the doctor part. And right now the B premium is $185 a month. So again, it's not free. There is a cost, a premium. And depending on your income, you may have to pay a surcharge, or what we call the IRMA tax, because that Medicare premium is going to be based on your income. So there are variables when it comes to Medicare and how much you're going to spend and what you're going to be on the hook for. And you need to understand this because this can be a complicated fish tank that you need to really understand what's in that thing and whether you got salt water, fresh water, whatever, because if you're going to make some decisions based on what you think is truth, you may learn from the school of hard knocks. That's what I will say to this question.
Elevate Your Wealth. You're tuned to it. Again, powered by Elevated Financial Management right here in Seattle. The opportunity to talk about your own situation when it comes to retirement. A complimentary appointment awaits you simply by calling 866-668-3625. If you haven't started planning, you're in the middle of something, need that second opinion, it's a complimentary appointment. You'll walk out with a written financial plan. 866-668-3625. You're not agreeing to become a client. This is an opportunity for you to test drive Elevated Financial Management. 866-668-3625. All right, back to our retirement game show. That's my game show voice. Next one up is this: two truths and a lie. I am always going to be comfortable with the risk level I'm at. 2, emergency savings is different than borrowing from your 401k. And 3, it's never too early to begin planning for retirement. Which one's the lie, guys?
You know, I have to say your game show host voice makes me feel like I'm running down the aisle at Wheel of Fortune, you know, and I can wave at everybody and I say, hey, Morgan, I'm really excited to be here. You know, shout out to my family, you know, so anyways, I really appreciate that.
Yeah, you're welcome.
So 2 truths and a lie.
I'm sorry. You're welcome.
There you go. There you go. So the lie is the first one. I'm always going to be comfortable with the risk level I am at. And as a matter of fact, you know what? This actually kind of really ties in with the article that we discussed in our first segment on the show today, talking about how people are cutting risk after the volatility that we've seen at this point in the year. And so that right there tells you that maybe you weren't invested in the right way in the first place, and it's something that needs to be addressed. But, you know, we're running out of time here, but I will say our risk tolerance is an assessment of the amount of loss that you're willing to accept and what you're comfortable with there. And that will absolutely change as you move closer to retirement and should change as you move closer to retirement.
Well, we're having fun with a game show, but your retirement is not a game.
No.
You need to have a plan. We've got positions on the calendar with Elevated Financial Management. Gentlemen, tell us what's going to happen.
You know, if you're listening today and you've heard us talk about some myths here and truth versus lies, but if you've got questions about Medicare, like we just talked about, what about where your income is coming from? Is it going to be guaranteed? Are you fortunate enough to have a pension? What about taxes? We haven't touched on taxes much today. Where are they headed? I think we all know the answer to that. Do you have a plan? So please, if you're out there and you have questions, you've recently retired from Boeing, pick up the phone, give us a call. Let us help you put together a plan that's going to create ultimate success when it comes to your retirement. And it's not just going to be a fairy tale. So please pick up the phone, give us a call now. Keep your checkbooks at home. We're just going to have a conversation. That's all it's going to be. So please give us a call right now.
866-668-3625. Again, complimentary appointment awaits. 866-668-3625. When we return, we've got more game show voice coming up next. Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management. Again, Elevated Financial Management, the website, efmnw.com. All letters, great resource, efmnw.com. Between the two, Mark and Casey, 42 plus years experience in the retirement planning business, helping their clients get ready for retirement. Certified financial fiduciaries and game show contestants. I'm Morgan Patrick, and I am your host. It is 2 truths and a lie when it comes to retirement. So now we move to this. 2 truths and a lie. Here we go. Number 1, diversification and asset allocation are essentially the same thing. Number 2, I should update my retirement plan periodically. And number 3, retirement planning has both emotional and financial components. Which one's the lie?
Well, this is an easy one here. Diversification and asset allocation are essentially the same thing. That one is the lie here. But I do want to say that asset allocation and diversification, they are kind of symbiotic, right? They do kind of go together a little bit, but you need to understand there is a real difference. And here's how to understand that. Asset allocation involves dividing your assets among the different asset categories, such as stocks, bonds, and maybe cash. Now, diversification could be labeled as this. It involves spreading your investments among and within different asset classes, right? So it could be stocks, bonds, REITs, but more importantly, do you have things that are not correlated, going up and down at the same time together? That's true diversification, and it is different than asset allocation. So again, this is something you want to make sure that you understand, because your portfolios can be big time affected both positively and negatively if you don't understand how to do this and make your portfolio the way it needs to be. And I think Casey's got a thought.
So your asset allocation, right, and diversification. So asset allocation, you could be allocated and have 20% in technology and 20% in consumer goods and 20% here and 20% there and 20% there. And that's great, but that's a very high level viewpoint. The diversification then goes, okay, I have 20% in technology. Is all 20% of that in Apple stock, or do I have some in Apple and Microsoft and Amazon? And am I diverse, right? So that's where that difference really comes in, is understanding that each time you zoom in on your portfolio, right? It's the same thing. We can look at it and say, well, I've got a 60-40 portfolio, so I'm diversely invested. That's not necessarily the case. If you have 60% in Apple stock and 40% in one municipal bond, you're not diversely invested, right? So it's really depending on what makes up those underlying investments. And this is why we're so focused on doing analysis for folks before we make recommendations. The idea that you're diverse because of a 60-40 or because of an asset allocation or something along those lines, that's really just not the case. And you know what? I'm just going to go ahead and say it. I think our industry does a poor job of helping people understand what it really means to be diversely invested and to be decorrelated from the market for producing income and all these kinds of things. And instead, we hear things all the time about a 60-40 and how that's a very moderate risk portfolio. Well, it really depends on what the underlying investments are, right? That's not the circumstance. It's kind of like, I love car analogies, right? Because I'm a car guy. So for me, I could say, well, I've got a pickup truck, and so I can tow anything because I've got a pickup truck. Well, little did you know, it's a Ford Ranger from 1988, right? So that Ford Ranger ain't pulling much of anything. It might not even pull a tiny little boat. So, that's not the same thing as a massive truck. Yes, they're both trucks, but they're not the same thing, right? And so that's really the key here, is you want to understand what that underlying investment is to figure out how it affects you and if it's the right thing for you specifically. And really, what you're trying to do. It needs to have a purpose.
Yeah, I just want to add one thing. How many times, Case, have we done an analysis, and one of the first things we look at is their pie chart? Mm-hmm. And there have been some where they have had 50, 60 different colors, right, little pieces, mm-hmm. right? And every time they believe, because they see all these little different colors, that they're totally diversified. Well, once you do the analysis for them, we realize they're all dancing together. They're all going up together or they're going down together. And that's where we help to educate them, to show them, no, you don't have real diversification, right? Because they're all doing the same thing. And that's what we're talking about here, is you need to understand that, because so many people think they're diversified because they have 20 or 30 different mutual funds, and we find out they all are owning the same stocks mm-hmm. inside those mutual funds. Right. So there is no diversification. They're just it's a different name fund, but the underlying assets are the same, and that's what the problem is, and that's what people never see, or so many, I don't want to say never, so many never seem to get educated about mm-hmm. and truly understand it.
Right.
If you are just tuning in to Elevate Your Wealth, we're in the middle of our game show, Two Truths and a Lie, when it comes to retirement, based on the old game show. And it's all about getting the information. It's all about having a plan for your retirement, a diagnosis for a remedy for what your situation is. And everybody is different. So make sure you have a plan. So let's get back to it. All right, flipping the switch. Here comes Game Show Voice. 2 truths and a lie when it comes to retirement. Here it is. I'll never be able to save enough for retirement. Second one is a Roth is pre-tax, so you don't have to worry about being taxed when withdrawing your capital in retirement. And the third, you don't need a lot of money to begin the process of planning for retirement. Gentlemen, where's the lie?
This is a trick question, Morgan, and I see you trying to trip us up over there. This one is actually 2 lies and a truth. So the first one is a lie. I'll never be able to save enough for retirement. That's not the case. You can save enough for retirement. It takes planning. It takes effort. It takes time to figure out how much you actually need to save for retirement and how to spend those dollars wisely and safely. But you can save enough for retirement. And the second is a lie as well. A Roth is pre-tax, so you don't have to worry about being taxed when withdrawing capital in your retirement. The second part of that is true, but the first part's not. It's actually after tax. So a Roth is after tax dollars, right? You pay the taxes up front, you put that money in, and then that's why you don't have to pay taxes later in retirement. So I see you over there trying to trip us up on this game show. That's really sneaky, Morgan. But it is important, right, that you pay attention to these kinds of things. That Roth, I'll say this: Roths get talked about a lot. It's very popular to discuss right now, and it's something that a lot of people are using. But there's a couple things to understand with a Roth. You really want to make sure that is the right move for you. It's fun to talk about tax-free money, and we talk about it all the time. And we do Roth conversions for clients. But it still has to be part of an overall plan, right? The Roth conversion or saving in a Roth is not necessarily step one to building a good retirement. Usually that's a secondary piece after the correct investment mix has been selected. Because it's great to do a Roth conversion and, okay, now this money is going to be tax-free for me later. But if that money is taking a tremendous amount of risk and then we lose a bunch because the stock market's been really turmoil, well, that conversion hasn't really worked out for you, right? And it takes time to recover what has been paid in taxes. It takes time to recover from market losses. So again, those pieces all need to be playing together to make sure that things work like they're supposed to.
Elevate Your Wealth, powered by Elevated Financial Management. We get on and talk retirement, the importance of having a plan, but we also give you an opportunity to take action on your own behalf. We have complimentary appointments available. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. You can call at any time and grab one. And again, you're going to walk out with a written financial plan, and it's no obligation. 866-668-3625. Again, any questions about where you currently sit with your retirement, get on this, 866-668-3625. All right, next up, 2 truths and a lie. Here we go. Tax planning is a huge component of a comprehensive plan. The second, the younger you retire, the more you risk running out of money. The third, a 401k is not a retirement plan in and of itself. Which one's the lie?
Well, this is another really good question here. So, the lie is assuming that if you plan well, you shouldn't have to worry about your retirement, and financial planner advisor can help you to build in that guaranteed income into your plan. So again, tax planning is a huge component of a comprehensive plan. The truth is, the younger you retire, the more you risk running out of money. So we know that's just, you've got longevity, much longer runway, you might say, if you retire younger, so you do need more money. And then the last part of that was a 401k is not a retirement plan in and of itself, and that's 100% true. So tax planning is a huge component of a comprehensive plan. So assuming that you plan well, you shouldn't have to worry about your retirement is absolutely just not the case. You've got to plan well, and an advisor can help you to set up your income, especially when you look at that question, the younger you are, the more you risk running out of money. Well, that kind of is the same thing. You're going to have to, again, have income that's set up from the very beginning, and a planner is going to be able to help you do that.
2 truths and a lie. We are down to our final question, and here it is. A fiduciary makes decisions with your best interest in mind. 2, you can create a plan that involves guaranteed lifetime income for life. And 3, I need $1 million to retire, which is the lie.
Do we get like double jeopardy or something? Because it's the last question. Is this one worth like extra bonus points or something?
Ta-dum, yes. Extra points.
Okay, cool. So the lie is I need $1 million to retire. Maybe you do, maybe you don't, right? We don't know what you need to retire. It depends on your individual circumstance. So, we really couldn't say what you need to retire. That has to be determined based on the lifestyle that you want in retirement, how much income you need, and where you're retiring in the stream of time, right? And what taxes look like and all those kinds of things. So, there's a lot of factors to that. And that $1 million number is really just not accurate. And so, the way to figure that out is to have a financial plan. So for those that are listening that want to take advantage of getting a written financial plan, that would like to get that put together, we will talk about how much you need for retirement, where you can save best, how you can be tax efficient, how you can make sure that the market doesn't decimate your retirement, and make sure that your money outlives you versus the other way around. So don't hesitate, pick up the phone, give us a shout. We're happy to put it together for you.
We'd like to thank you for playing Two Truths and a Retirement Lie. That's what we just did. Now your opportunity to get on the calendar with Elevated Financial Management. Call this number, 866-668-3625. That's 866-668-3625. We're back right after this. Welcome back into Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins. They've got 42 plus years combined experience in the retirement planning business. They're certified financial fiduciaries. You can find them right here in Seattle. Elevated Financial Management website. It's a resource. Use it. EFMNW.com. All letters. EFMNW.com. There are links to the TV show. Our radio shows are in podcast form, just really good information there. So we talk about this quite often. I mean, right now, the atmosphere it's negative. It's people are freaking out. We kid Mark about being Eeyore from time to time, and there are a lot of Eeyores out there right now, guys. But how can we be positive? Let's end this show with turning the frowns upside down. We're smiling. How can we be positive?
Yeah, I really appreciate that, Morgan. I think, I just want to say to our listeners, there's something called FUD, right? And we've talked about this, and you're probably familiar with the term FUD, fear, uncertainty, and doubt. And the reality is that's what a lot of the media likes to sell, right? That is what the media likes to sell because it concerns people, and so they tune back in, right? And that's how the media does what they do. And so sometimes when we're talking on our show, we're talking about what's happening in the world and how inflation is crazy and what's going on with the market. And it can feel, at least Mark and I feel this way because we talk about this a lot when we're preparing what we're going to talk about. And the idea is that sometimes we feel like we're being negative, and it's really not intentional, right? It's just that's kind of the stratosphere that we live in right now, right? That's the climate, the environment that we live in, is that there is a lot of fear right now. There is a lot of uncertainty. There is a lot of doubt, and rightfully so. And so we wanted to just kind of wrap the show up in a positive way and talk about the idea of how you solve some of these problems, right? How do you solve the fear that's going on and the doubt? So there's a couple main concerns that we've taken note of. I'll just highlight this first one, market volatility, right? I think that's on the top of everybody's mind. And it's something that has to be addressed. Retirees are especially vulnerable to the market. And it's simply because you just don't have the time to recover, right? You don't have 20 years before you retire. You might have 5, right? Or maybe you retired 5 years ago. And so that concern is really is very valid. And the way that we can be positive about that is it really comes down to taking the time to have a conversation and have a plan for yourself, right? That's how you turn this negative into a positive. Because that market volatility is not as concerning when it doesn't affect every dollar that you have, and it doesn't affect your income for tomorrow. But that's where it really starts to be an issue. The other side of this is that I think, Mark, you mentioned this earlier, that market volatility, if you have a plan, can actually be a good thing because it creates a potential buying opportunity for you, right? And so that's how we turn these negatives into a positive, is we not necessarily try to find the silver lining, but really look for what this potential downside offers in the way of a potential upside, or how it allows you to potentially be educated to do something different. And that's why we're here every week, right? I mean, this show is about an hour-long show. It takes us time to get this prepared. It takes time out of our day to put these notes together. It takes time for us to teach the retirement classes that we do and to do TV like we do. But it's all done with the intent of education so that you can take whatever's happening in the world at the time and turn it, hopefully, into something positive for you.
Yeah, I was just going to say, when it comes to this market volatility, that, again, if you have a plan, Casey does a really nice job, too, of helping clients to understand that if the dollar has a specific purpose, that once we get income taken care of, there's a purpose for those dollars. If we want long-term growth, we have a specific purpose for those dollars. Where volatility is going to go up and down, like we mentioned. We also make sure that our clients have plenty of liquidity, right? They have enough money in savings for life events. So again, if the plan is put together with a specific purpose for specific dollars, it takes so much stress, because a second one that comes up a lot in this, what we're talking about, is inflation. Everybody's concerned about inflation right now. We know, we go to the gas station around here, it seems like we're never going to get off of $4.5, $4.5 to $5 a gallon is just what we've seen for years now. And again, that hurts everybody, but it's those that are on a limited income or a set income that are going to be the most affected by inflation, right? So again, how is your retirement set up? Do you have income that will have a built-in source of escalation, right? It's got an influx. It's got a COLA, you might say, so that you can get more income as inflation grows. And so that's something we all need to be concerned about.
So important just to be on top of all of this. And we're kind of talking about a lot of these topics that have this negative tone in the last months, even last several years. When we start talking about market volatility, and Casey, he nailed it. I mean, look at it as an opportunity. Make sure you have a plan. Make sure your retirement income, the guaranteed income, is covered. And then the rest of it is an opportunity for you to take advantage of some of that market volatility. And then, as Mark just pointed out, inflation, it's going to be there. It's not going away, but you have to plan for it. You have to pad your accounts so you can cover just the rise in costs of everything. But we've all got to do that. And it can be done if you plan for it. Now, the opportunity to get on the calendar with Elevated Financial Management and talk about your concerns when it comes to retirement, well, you can do it at any time during the course of this show. The appointments are complimentary. You're leaving the checkbook at home. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call this number, 866-668-3625. That'll get you the ticket to ride. That'll get you the appointment. Again, 866-668-3625. It's complimentary. You're going to walk out with a written financial plan, and there's no obligation, meaning you're not agreeing to become a client. They're not agreeing to take you as a client. This is a test drive. Call now, 866-668-3625. So we're talking about turning the frown upside down. We want to talk about the positives. Market volatility could be an opportunity. Inflation, going to be there. Got to plan for it. Got to add to those accounts. Guys, what about healthcare costs? This is something that is always going to go up.
Yeah, this is something that concerns everybody that's in retirement or close to retirement, and it should. But again, how can we turn that negative, that, oh my gosh, I can't believe what I'm having to spend in healthcare, and turn that around? Well, one of the biggest things is, you have the right type of insurance in place, right? That's number one. We're going to touch on long-term care here in a moment, but right now you've got to be sure that you have the right type of an insurance policy. Now, we know when it comes to Medicare, you can go on what's known as a Medicare supplement plan or a Med Advantage plan, which is a cost-based plan. And so, again, having the type that is going to be most effective in your area and your individual circumstances. If you travel a lot, you may want to be sure that you look into having a Med Supplement plan versus a Med Advantage plan. Because a Med Advantage plan, you've got to stay in the network. Right now, we have emergency services if we go out of network. But again, you need to be sure that you have the right type of insurance when it comes to this type of plan.
Yeah, it does, right? Again, it's all about selecting the right tool and the right application, you know. And I like this illustration. I would think that, you know, if you were going to go have a remodel done on your home and you're interviewing different companies to do that remodel work for you, right?
Yeah.
And one of them says, well, all I have is a hammer. That's the only tool that I use. You'd probably shy away from that individual, right? You would go with somebody who has all the tools in the tool belt and says, hey, I don't really know which tool I'm going to use, but I've got them all, and we'll use them when it's the right time, right? That's the person you want to select, right? And when it comes to these types of things like with healthcare, Medicare, long-term care, those kinds of things, you really want to be working with a group that has all the tools in the tool belt, because that is an important piece to the puzzle, but covering healthcare costs and long-term care doesn't mean anything if you don't have the income that you need, right? You got to have the group that can help you with all those things. It's really important. Now, something else that's on this kind of list that we put together here is longevity, you know, and that's one of the biggest, it's not one of, it is the biggest year after year after year. That's the biggest concern that retirees have after every study that's done, every, poll that's taken is, am I going to outlive my money? And I'll just say this, that's rightfully a big concern, and it is unnerving, and we get that. But I think where we can try to be positive on this is twofold. One, how great is it that you can potentially look at your life and think, well, I have got a lot of runway left, which means I've got a lot of years to enjoy and do things that I want to do. And while it's not a fun thought to think that you might run out of funds, it's nice to know that you've got the potential, because there's a lot of people that have had their lives cut short. There are a lot of people, speaking from experience, I have a couple folks that I know that are very young that have gotten terminal diagnoses, right? Or diagnoses. I'm not quite sure what the plural is. But still, the point remains the same, right? If we have the longevity, that's something we can be excited about. Now, the other piece to this, too, is that when it comes to safe investments, right, we've all seen interest rates rise over the last number of years, and they haven't really gone down, and so there's concern there. But those higher interest rates are actually a positive when it comes to longevity as well, because those higher interest rates mean that you can have safe money producing income for you or producing some kind of return, still get something moderate as far as the return goes without having to take a ton of risk. And right now, all the providers of different investment tools and things like that are competing for your business because it's a very competitive market right now, which means that the money that you've worked hard to save and build for retirement is potentially going to work better for you now than it ever has in the past, and you've got the options to do that. So there are a lot of things that we can be positive about. It just takes some planning to be able to do it.
Yeah, I think one of the things about longevity risk that Casey was just mentioning, it is the risk multiplier for so many of the other things, whether it be the odds of needing long-term care go up dramatically. But the bottom line is your money going to last? And if you've got a guaranteed income stream, pension, annuity, that's going to help take so much pressure off. So if you're out here today and you're got all these questions in your mind based on what we've talked about today, what about taxes? What should you do? What type of plan do you need to put in place? What about your income? Is your income going to be set and guaranteed for life? What about how do I move assets to my children or grandchildren? What's the best way to deal with that? Any of these questions that cause anxiety, please pick up the phone, give us a call. Let us help you put together a plan with our team of planners, and you don't have to, leave your checkbook at home. You don't have to bring in a check. So please pick up the phone, give us a call now.
All right, here are the appointment numbers. 866-668-3625. That's 866-668-3625. Don't hesitate. These are complimentary. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. 866-668-3625. Call. Another edition of Elevate Your Wealth in the books. For Mark and Casey, I'm Morgan. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.